Okay, so we got to talk about Bed Bath & Beyond because I think it represents the kind of market that we're in. We take a look at this. It is up 261% on the month. And then even just today, it was up 92% in one day. However, in the after hours, as of this recording, it's fallen 37%. On the year, you can see this thing has been going up and down. It spiked, let's say early April, back in the spring, and then it spiked again in the summer. And then it's spiking, but again, is also falling. We're talking about a company that sells bedding. And I was looking at the numbers of just the company itself, the fundamentals. It loses $1.3 million a year and also has about $1.93 billion in debt and has a negative debt to equity ratio of negative 242%. The reason why the stock is falling is because as the share price has been going crazy to the upside this past month, the company announced that they're going to be selling some shares to essentially try to pay off their debts and avoid bankruptcy. And this represents the market that we're in because I want to be real. You can certainly make money on Bed and Beyond. You can totally make money on it, but this is a trader's market. I wouldn't recommend, and we're just looking at numbers and just not, any emotions or anything like that, just numbers. A company that loses $1.3 billion a year and has, a couple $1 billion in debt is not a great investment. I don't think it's a crazy thing to say. Also, too, a company that's poorly managed to where they essentially ignored online sales and basically got beat by your Targets, your Walmarts, and your Amazon. It's just really tough. But yes, you can make money on the month. However, just be aware, and it's sort of why I want to emphasize again, this is a trade. This is a trader's market, and it represents the kind of market that we're in. It's not for investors. You're not investing in Bed Bath & Beyond, and I hope you guys understand that. And you got to bring up Nordstrom's, right? This is another one. The past month, it's up 46% on the month. And basically, people were like, hey, I'm getting into Nordstrom's because Ryan Cohen's getting into Nordstrom's and he's all about GameStop. And this is essentially a trader's market. And it's interesting because I personally thought that this sort of meme stock stuff was over because the money printing is over, right? We're going into quantitative tightening. And we've had this down market for, a year or so. And it's kind of interesting because, maybe this is just shorts covering and this is the final throw of this kind of thing. But I just want you to understand, I can't emphasize enough, this is a trader's market, 100%. Look at this. This is Tesla, right? This is a major company up 62% in a month, which is pretty unreal, to be fairly frank. And if you guys, got into Tesla early in the month, fantastic. You're making money, you're doing great. However, I want you to look at the 5-year chart, right? So yes, in 5 years, you can see the numbers. It's 841%. Yes, you did great in the last 5 years, but just look how up and down this thing is. I mean, it's really up and down. And I want to emphasize over and over again that this is a trader's market. This is not about fundamentals because for me, Tesla is overvalued. And I get it. The Tesla bulls will tell you, oh, Tesla's awesome. It's going to be awesome. And it's going to go up 1,000% in the next 5 years. Maybe our trading market will continue. I personally don't think so, mostly because we're not printing any money more and we're raising interest rates. But yes, in the short term, you can make money if you understand that this is a trader's market. This is not for investors. And this is sort of a crazy situation that we're in because, it's just the way that it is. The money's flying around and stuff like that. And it's all fun and games until it's not. And so this is why I'm just putting this one out to you guys that this is a trader's market. Take a look at this. So, in positive news for Tesla, I see that the Cybertruck might be coming out. Maybe I see that Elon Musk is, winning trials. And I also see that Elon Musk has telling everyone that, maybe Twitter is going to break even. So all this kind of stuff, it's not really fundamentals. It's just meme stock kind of stuff. Oh my God, Twitter is awesome. And Elon Musk is more awesome and he can tweet whatever he wants and he can tweet 420 all day, every day. That's awesome. I'm going to buy the stock. And, you look at the price of the stock, trading at 194 and my gut feeling is saying, okay, for the people who are buying this stuff, they're probably saying, okay, $200 is like the psychological barrier kind of thing, right? We're not even talking about fundamentals. We're just talking about price of the stock. When you're just talking about price of stock on things, you're not talking about P ratios, you're not talking about revenue, you're not talking about debt, you're not talking about these kind of things. You're in a meme stock. And I just want to be very clear on that. And yes, maybe this thing might go up, but it's not trading on fundamentals. Just be aware that this is the kind of market that we're in. Look at this. Shiba Inu, right? It says here, headline, Shiba Inu price rebounds 100% after record lows against Dogecoin. More upside ahead. It's like we're literally still buying coins with dogs on it, right? Just let that sink in. People are still buying coins with dogs on it. I've never been an advocate of this stuff. I think it's all junk, but I am well aware that people do make money on these things. I can see it for myself. But I just want to emphasize that this is a trader's market. Okay, so let's make that really, really clear. In any trader's market, right? You can trade stocks, which means you buy low, sell high, and that's it. And so don't be thinking about this stuff as an investment. That's my opinion. I don't think it's a crazy opinion to say when we're talking about these kind of stuff that we're just seeing. And it's just, it's really funny. It's really right. Now, in terms of like real news, and then yes, it is real news that this is a trader's market, but there are other things to talk about as well. Dell is cutting jobs. I just saw this, 6,600 jobs. It's quite a bit. And this is very important because, as you know, one of the biggest companies in the world, say something like Apple, has not yet fired people yet. I say yet, although they are slowing down. And when you see something like Dell and others, big tech companies firing people, it is a bit concerning. This is something that I've mentioned many times, is that the unemployment rate, is crazy low right now. However, just because you have a job doesn't necessarily mean it pays all of your bills, and doesn't necessarily mean that it is the job you want or the city you want to live in. And I just want to, make sure you guys know this, and I'm sure you guys know, but I'm just wanted to emphasize my opinion on this. I was looking at this chart here for Dell. This is the lowest headcount they've had in about 6 years. It's really interesting. And one thing I was thinking about, because we're seeing, increased investments from various companies in AI, and I'm going to do a separate video on Google. So believe me, guys, I saw the headline on that one. I'll do a separate video. But I think this is going to be a trend in the future to where companies just won't need as many people, right, going forward, because we have AI to do all these things. Also, too, if we have the slowing economy. Now, it's interesting because whether or not there's a recession is anyone's guess. We're going to get into that. But before we get to there, I want to mention that just to follow up to one of the stories we did earlier. The New York Stock Exchange had that weird, trading halt thing. Evidently, they're going to actually, and if you remember, they basically froze trading on stocks. It was like a glitch. But they're actually going to pay people money back for the mistake. They're saying about 60%. So a bunch of people filed claims, and then some of them, they're going to give the money back. And I think my guess would be if, said companies had like a stop loss and automatically triggered a transaction when this was clearly a glitch. And maybe their stop loss was like 30% below the, normal price. And you're talking about like a big company, like say a Coca-Cola. It's like you wouldn't expect Coca-Cola to drop 30% a day. And so that certainly would be a market error. And evidently they're going to pay some people back, which is really interesting. Also, too, and I talk about the recession thing, it's interesting because Goldman actually changed their forecast on whether or not there'll be a recession, and they're saying they're lowering it to only a 25% chance. So that's very interesting. We'll see. Goldman was actually right so far on the bottom for the Chinese stocks. We actually, and I'm just giving an example of that, we actually talked about that a couple months ago, and they're saying, hey, it's the bottom, and I mentioned to you guys, and I'm just mentioning to you guys again, Goldman is saying maybe not a recession. We will see. I do think, and this is something that I will hold to, regardless of what the numbers say, and I always say the same thing, if you're out of a job, if you're struggling, it doesn't matter what everyone else is doing, right? You're struggling, so it's a recession for you. So I think that's very important to always have the job skills and just sort of take care of yourself, right? So we track the whole markets together, but take care of yourself, because obviously maybe Goldman says, maybe things look better than they are, but people over at Dell who just got fired, I mean, they're not so happy. So I think that's important to know. Everyone's situation is going to be different, but you do also understand the overall thing. Now, it's funny because there's another headline that says, stock euphoria deflated with Powell as wild card markets rapid. It's so ridiculous because, it's not like Powell's that big of a wild card. I think he's speaking tomorrow to some sort of economic club or something like that. But he literally says what they're going to do. And then like the markets are opposite. So that's what's sort of funny when you read these weird headlines. Because like Powell's like, say, hey guys, we're going to raise interest rates. We're going to keep them elevated, and we're going to watch to see what inflation does. And then like the market's like, oh, okay, I'm going to rally. And it's like, okay, I don't know what you guys are doing. But the joke and the phrase that you always hear a lot is markets can stay irrational longer than you can be solvent. Another example of what the Fed is saying, this is Fed Bostic, one of the Fed People Committee, and headline is, Fed Bostic says higher peak rate on table after jobs blowout. So we had a decent jobs report in terms of low unemployment, and this is essentially saying, signaling to the Fed that they could keep rates higher and elevated for a little bit longer. I want to read some direct quotes from Bostic, though you guys can hear the sense of language. And again, whenever the Fed gives some sort of public speech, it is not just like random stuff. This is very controlled. They know what they're doing, so they're well aware of the messaging they're putting out there. So this is the Fed. If a stronger than expected economy persists, it'll probably mean we have to do a little more work. That's coming from Bostic, and I would expect that would translate into us raising interest rates more than I have projected now. And then he's saying his base case is 5.1%. And then he further goes on. Job one for us has got to be to get inflation back under control. And I'm going to do all I can to see that we do that. I like optionality, so I never want to foreclose any action, but I do think that a lot of this will depend on how the economy evolves relative to my expectations. We understand what data dependence means, and we're going to try to avoid getting locked in to just one approach. And then he was saying he's thinking this year inflation will drop to the low threes. That's just what he's saying. But that's different than what the target rate of 2. And the Fed always tries to give you the best case scenario. That's really important. Now, this was an interesting chart. Now, we're just talking about affordability and stuff like that and talking about the Dell employees, but this was an interesting chart. I'm showing you guys, and I really want to focus this all the time when I just show you guys real numbers. So this one was saying that some Americans are seeing some wage growth. That's what it's saying compared to inflation, which is very interesting. Because I remember we were just looking at a chart like a week or so ago, and it looked like that wage growth was slowing down. But yes, inflation is also slowing down. So that's sort of the trick is where, is wage growth actually going above inflation? Now, one of the things to remember, though, it depends what industry you're in, right? So let's say, for example, wage growth is in fact indeed, growing faster than inflation. But what if you haven't got this would be like today, but what if you haven't got a raise in, say, like 3 years? This is sort of like what people are saying in the UK and various fields. They say, like, we haven't gotten a raise in 3 years. And yes, if you give us a raise this year, we still have a lot to catch up on. So again, everyone's situation is going to be different, but I want to show you the sort of the overall picture. And this is something I just want to emphasize over and over again is if you really want to do well in the world is do your best you can to leave your emotions aside and just go with facts. Like, here's a simple example of the balloon incident. I've seen a couple of headlines. Someone asked me about this, and I just want to mention it. Read the headline. Chinese balloons were spotted near U.S. during Trump's era. And the basic reason I mention this is because, yes, there was totally a balloon. Biden was president. They shot it down, etc. And some people act like this is the first time it's ever happened, and we've never seen this before. And under President Trump, there would be nothing like that. But it's just simply not true. There were Chinese balloons under Trump, but there were Chinese balloons under Biden, right? And I just want to live in reality. And I know for some people, reality is kind of frustrating because, like dealing with the truth become really burdensome. There was a phrase that a professor taught me a long time ago. It was just a joke. He would say his father would always tell him, don't confuse me with the facts. My mind is already made up. And I don't want to live in that world, and I don't want you to either. And just sort of accept facts for what they are, and you'll do much better in life. And also, too, this is just a fact. We're in a crazy trader's market, and yes, you can make a lot of money on like something like a Bed Bath & Beyond or Nordstrom or whatever. But just understand the kind of market that you're in. I mean, something that goes up 92% in one day and then falls 40% in the after hours is not normal. It's not safe, and don't be going through this stuff with rose-colored glasses, because that's how you get burnt in this kind of world. Because in this financial markets, there's a lot of corruption and just craziness and shenanigans. That's the way that it is. So anyway, I'd love to hear your thoughts on any one of these things. Thank you for your time, and I'll catch you in the next video.